Hey guys, it's James, and today I wanted to take DOV and put it through my valuation calculator where I evaluate different stocks using the discounted cash flow model, Graham's model, and the dividend discount model. Now, this spreadsheet is available over on my Patreon. If you guys want to follow along with it, sign up for Patreon and you can have access to this calculator as well as any of the other calculators that I do build. Now, like with all my other calculators, yellows are the inputs. These are the only things that you change, and the greens are my outputs. Now today I'm looking at DOV, or Dover Corporation. It is one of the longest paying dividend corporations out there. DOV, or Dover Corporation, has paid a dividend for over 65 years. So what is DOV and what do they do? Dover is a diversified global manufacturer that delivers innovative equipment and components, consumable supplies, aftermarket parts, software and digital solutions, and support services. They have 5 main business segments, one in the engineered products segment, clean energy and fueling segment. They also have an imaging and identification segment, a pumps and process solutions segment, and then last but not least, a climate and sustainable technologies segment. If you want to look more into what Dover Corporation does, head over to their website and take a peek around their website. But today we're going to be using the discounted cash flow model to evaluate to see how much we should be paying with their free cash flows, as well as the Graham's model, as well as the dividend discount model. And the dividend discount model is a fairly decent model for stocks that do have paid a dividend for a fairly long time period. So let's start with the dividend or the discounted cash flow model. So first off, we need to find the 10 years of free cash flow, starting from 2012 all the way up until the end of last year, and we find that over on macrotrends.net. Come down to the bottom of the page, and we have in hundreds of millions, starting in 2021, $951 million worth of free cash flow, and then all the way down to 2012. So I have already taken these 10 years of free cash flow and put them into the calculator. We also need to go find how much cash they have on hand at the present moment and how much total debt that the company is holding. So I've already done that. I found these two numbers. And if you want to play along, or you want to do this for another ticker symbol, where do you find these numbers? Well, I can find them over on Seeking Alpha under the Valuation tab. All the way at the bottom, the total debt for DOV is $3.63 billion, and the total cash is $306 million. And then you need a perpetual growth rate, and typically this is going to be anywhere from 1 to 2%, and then a discount rate of anywhere from about 5, 6, 7, or 8%. So with all of that in the calculator, the discounted cash flow model is going to do some workings behind the scene and then spit out a valuation. And for the discounted cash flow, that comes to about $220. Coming down to Graham's model is fairly simple, and for my calculator here, a lot of things are going on behind the scenes to calculate the Graham's model valuation, but all you need is an expected growth rate over the next 7 to 10 years, as well as the AAA corporate bond rate. The growth rate is going to be somewhere between 5 and 10% according to analysts' expectations, and I'm going to be using 8% for the purposes of this video, and the AAA corporate bond rate is around 5%. That gives us a value of about $106 for DOV. Coming down to the dividend discounted model, you only need 4 separate pieces to be able to determine a value with the dividend discount model: the dividend payout, the 5-year dividend growth, the risk-free rate, and the return of the market, or the expected return of the market. Now, the dividend payout, you can find that over on Seeking Alpha. You come up to their dividends tab, and under their dividend scorecard, check out their dividend yield or forward dividend yield of 1.45%, their annual payout of around $2.02, and their 5-year growth rate. So we are going to use the annual payout of $2.02 as well as using this figure of 6.77% 5-year annual growth rate. We put that into the first two spots here for the calculator, and then the risk-free rate. And typically for the dividend discount model, this is going to be the 10-year bond yield. This would be if you were to take your money and put it in a 10-year bond, risk-free, you would receive around 3.83%. This helps you determine a value for DOV using this model. If you were to put your money into DOV, or you were just to put your money into the 10-year bond yield. And then simply, last but not least, the return of the market. What can you expect over the long term? Over 10, 15, 20 years, how much can you expect your return from the market to be? So with all of this put in the calculator, the dividend discount model is giving us a valuation of $75 for DOV. Now, most of the time, we want to apply a margin of safety. Now, you can choose your margin of safety. The lower margin of safety, probably more for long-term investors, but a higher margin of safety maybe for those that are about to start pulling out of their dividend portfolios. And then once all of this is in the calculator, click go, and we can see that the final valuation comes to about $120 with a margin of safety of 10%. The current Dover Corporation price is $139.47, so that would come to a sell for DOV. Just take a peek here of their 10 years of annual free cash flow. It does look like they did take a dive in 2016, 17, and 18, and then they have started to come back up with some of their free cash flow numbers over the past couple years. And this is a 2-year chart with moving averages for the price of DOV. You can see over the past 3 to 6 months here, DOV has fallen to this 116, 117, 117, which is very close to the actual evaluation for DOV, which I find fairly interesting. That we come to a valuation of $120, and over the past 3 to 6 months, the price has fallen to that. It has risen up to about this $140 figure, and then it fell right back down to that 116. So if you guys are looking for solid, safe dividends, I would probably hold off on this until it hits around that 110 to 115 figure. And over on our watch list, we have done this for Coca-Cola, or KO. So we're going to go ahead and put in $120.42. And we're going to start keeping running tabs on some of these dividend paying companies. And today is 11/19/22. Type this in. And with the yellow inputted into our calculator here over on the left side, columns B and C, like I said at the beginning of the video, all the yellows are our inputs and the greens are our outputs. Put in the valuation date and previous valuation, which was 120 for DOV, and we did this for Coca-Cola on November 12th at $48.19, and we're saying that it is overpriced for these two stocks that we have done valuations on. Now, this number right here is going to constantly update, pulling from the Google Finance price list. So as this price starts to fluctuate, you can check this from time to time and check your previous valuations. And let's say we did a valuation a year from now, and DOV did go up to about, say, $180. And we valued it at 180, and the price was under 180, it would automatically say take a look. But for today, the price that we valued DOV at was $120.42. If you guys want access to this calculator, it is available on Patreon. You can do your own evaluations and follow along, and then start your own watch list with your valuation date and your previous valuation and compare that to today's price. We also do have some analyst ratings being pulled from finviz.com. They take a bunch of analyst ratings and I believe that average them together, and they come out with a number anywhere from 0 to 5. And if it is under 2, I have it automatically showing up as green. If it is anywhere from 2 to 3, it's going to be yellow, and anything over 3 is going to be red, where all the green is going to be either a strong buy or buy, yellow a hold, red a sell, or a dark red as a strong sell. So with that, head down to the comments, let me know which one you would like to see next, and with that, thanks for watching.